What is going on, everyone? Welcome back to the channel. Happy Sunday. As we know, the market opens in a few hours, so I'm going to dissect everything that happened last week and what we need to know going forward this week. It is a very, very big week in terms of central bank data. We have a lot of Fed speakers talking. We have the RBA, the ECB, and obviously a follow through from last week's non-farm payroll, which was a bit of a mess, but we're going to dissect that as well. So let's jump straight into the charts and go from there. At the forefront of my weekly analysis is always the dollar. I want to know where the dollar is, how it's positioned, what happened last week with NFP, and more so how we can obviously capitalize on this together. So weekly time frame is quite bullish. I'm still a dollar bull, especially with the global macro picture panning out. Dollar is king, cash is king. We are going to see those influx of dollar flows. It is just a case of where we get involved. Looking at this on the daily, we've obviously, if I have to just go ahead and highlight the fact that we came back to retest all this liquidity last week, right? We know non-farm payroll on Friday was a bit of a miss. We obviously had a positive headline figure above the 300K mark. However, the unemployment rate ticked up and wages dropped slightly as well. So that gave a bit of a knee-jerk reaction to the dollar. And we can actually see that on the hourly. So on the hourly, the market sold itself straight into key areas of interest, which we drew on the daily time frame, and we had that massive spurge up in the dollar. So looking at this right now, I am still, for now, bullish on dollar. I don't see that changing. However, how I trade this week right now is so important because I want to know where I am positioned with dollar, but where I am positioned with the other currencies that are going to be active this week. You got the RBA raising rates by 50 basis points as expected. You got the ECB also in the camp of 50 basis points, so half percentage point increase in rates. However, the market's so ever aggressively expecting 75. So if I am a dollar bull, I wouldn't necessarily be wanting to buy euro. However, I now need to put the two pictures of euro and try and establish where that may be. If we get 50 basis points for the euro as expected, right, we may see a slump on the euro. If we have 75, you may get those euro bulls coming back into the picture. So looking at euro on the 4 hour, we can see the price on the euro. Let's get rid of this for a second. Price on the euro is range bound at these lows. Now, if I have to create two scenarios of what I would be doing, if on Thursday the ECB do come out very hawkish and they do raise rates by 75 basis points, I'm personally possibly looking to buy those euro dips. Now, will I be partaking? It's all about what asset and what currency pair you a market participant of. So will I be a participant of euro USD? Maybe not. Would I look at something else like euro sterling? Possibly. Could we buy the dips on euro sterling? That might give us a better option. As we can see across the board on euro sterling, we've had this massive rally to the upside. So the markets are then pricing this in. So on euro sterling, obviously what we would be looking for is anywhere to buy the dips. So if the market obviously had to come back into this once again, we've already retested that once over there. But if we were to have a bit of a correction, or if we were to get these lows over here, then I would be interested. Possibly 85. 85 does make a bit more sense. If I have to choose one of the levels, 85 does make a bit more sense. You can obviously whack a fib on there. That makes even more sense. So for myself, I am in the camp of them raising rates. What I'm not sure of, and no one is, it's a guessing game at this point of how much they're going to do and what their view is going forward. Only they know. So that's the euro. I'll show you on the economic calendar briefly of what I'm actually expecting. So Monday, on the forefront, Monday is a holiday in the States. It's Labor Day. So I hope everyone has a good day if you're watching this in the States. So do expect a bit of a drop in volatility. However, for myself, I am still a dollar bull. Nothing really else to worry about. Tuesday, RBA, right, expected at 50 basis points. The current interest rate is at 1.85%. They are expected to take that to 2.35. That's a 50 basis point or 0.5% increase in rates, which should lift the Aussie. If we have to look at where the Aussie dollar is positioned, there again, Aussie is approaching key levels of interest. If we look on the higher time frames, this level that we have over here, just ignore this. This level that we have over here, where we are currently trading, is a massive level for the pair. Now, if I do expect some sort of correction in the dollar, then we could look at the likes of Aussie possibly trading higher. Now, I was involved in a short last week where I did take my profits at 67,750 just based on where we were. I saw price obviously slowing down. I didn't really like that, so I took my profits. I did alert everyone. By the way, I trade live London sessions, so I did give that trade out live, which is really good to see. I'll put a little video, yeah, or screenshot, yeah, so you guys can see. Cool. So that being said, I do like where Aussie is positioned. If I have to go ahead and delete everything, and I have to just choose one sort of direction for this, I would just say, if on Tuesday the RBA come and raise rates as expected, we may then see a bit of a lift in the Aussie, which does tickle my fancy along the lines of that. As I've mentioned before, and I'll say it again, your whole objective is to come into the markets, find a positive risk reward that suits your current trading plan. You manage your risk, and that is it. Once you're in, you're in. Don't alter your positions. Don't alter your risk. That is not following a plan. So you get into the market, follow your plan, trade that plan, manage your risk, get out, rinse and repeat, and that is it. So Aussie, possibly, I'll be looking at how the event pans out, right? But I do like this level of support of 67.70. If I have to look at the economic calendar briefly again and just show you that, fine. The market's expecting 50 basis points. If there's anything less, or if there's any negative comments, if there's any dovish tone, we are going to see the Aussie get hit, right? And as a trader, you want to react. You want to be like a central bank and you want to have a reaction function. You want to react to the data. So for myself, I will obviously be watching out for the statement, watching out for any tonality changes and so forth for the RBA. In terms of later on that week, Wednesday, we obviously have Aussie GDP. The trade balance in China is quite important to show how the Asian side of the globe is being affected with this shrink in demand, this shrink in growth. So we'll obviously look at that. That will more than likely, I won't say be a negative number, but I personally expect that lower. It is already expected at lower than previous, but I expect anywhere between 85 and 80 billion on that front. And there again, Bank of England on, what is that, on Wednesday? Bank of England at 10 a.m. got Governor Bailey speaking. There again, pound has been beat. If we look at pound, it's actually disgusting. I obviously live here in the UK, and just looking at the value of the pound, I'm like, well, what is going on? So pound is obviously approaching these COVID lows. Back in 2020, we hit the lows of 114.50, and there again, back in the 1980s, we've obviously hit these levels and hit 110 previously. So for myself right now, based on how bearish this is, do we get some sort of reaction from the Bank of England? Do we get some sort of intervention? Then these could possibly be dips to buy. However, for myself, I'm just monitoring this right now, but pound is dead. Looking at this on the monthly time frame, we've obviously had that monthly closure back below 1.2, which is such a crucial level on that front. So nothing on this pair for me right now, but I am closely monitoring. Possibly for a bounce. I favor a bit of a bounce. I feel we are massively oversold. I do think that we are due some sort of correction. If we were to get a correction, 117.50 is my sort of go-to area. I like it. It's a round number. We have traded there several times before. There is a bit of liquidity here that, in my personal opinion, hasn't been collected. So, especially over here at 118, I do sense a bit of an area that needs attending to. So, if we were to get that correction, right, then that could be a corrective play for us to capitalize on this week. So, closely monitoring that one. Back to the calendar ever so briefly. Eurozone GDP on Wednesday as well. My big focus then on Thursday is the ECB, right? They are expecting to raise rates at 0.5%, so that's 50 basis points. But please bear in mind, the last time the European Central Bank was raising rates this aggressive, we went into the 2008 meltdown and the crash. And although no one likes referring to it, but every time the ECB raises interest rates, we're all fucked. So let's try and realize how we can capitalize on this and on what pairs. So euro sterling, as I mentioned, I am personally expecting a bit of a correction back to 85. And yeah, should we obviously get that hawkish action from the ECB, then I do still see this possibly heading higher. There is a bit of a fair region that I would like to target over here, around 88, 89. Obviously with that dovish tone in the UK right now, and pound is obviously on the back foot. If we do have a hawkish ECB, so we have a positive European Central Bank meeting, then I do see that further lift up in the euro. However, that being said, if they do come out negative, then I'm going to play that side of the game too. So euro, sterling, possibly back into 85. If we were to capitalize on the short to actually get there, then price would have to break back below 86. If price breaks back below 86, you got a nice little 100 pip free fall to my area of interest. So that could be something to then look out for. In terms of gold, gold was a fairly interesting one last week. We hit that target of 1700 that I have been calling for quite some time now. And yeah, just looking at gold over here, this inside bar formation that we had, let me just get rid of some of this. An inside bar formation is when you have a very bearish or bullish candlestick, so a very big momentum candlestick in one direction. You obviously have that correction before the continuation. If you just look at this, we had that big bearish sell-off. We had that correction, and then we had that continuation in that direction. We obviously sold off to equal lows of that 1700, and we had that bounce on that negative NFP release. So what's my view going forward? I am still, in terms of the recession that we have in front of us, I am still bearish long term. I do still think we're going to see 1600. It's just a matter of when. But if I was to play this game and choose an area, I do favor price possibly coming back into this region of 1750. Anywhere up into that area, I would love to short it. Even back into 1735, that gives me an area to target on that one. In terms of the Dow Jones, I obviously made a big short video around this 34,000 region, and we've obviously plummeted from those highs down about 8%. S&P as well, quite aggressive. I have this already drawn on the 4 hour, down 10% from the highs. So that was a very, very good trade. If anyone took that from my YouTube videos, shout out to you. Thanks for watching. And yeah, so for myself, I still favor dollar bulls. It is just a case of where we're going to be buying from. So 2 hour, 1 hour, price is still bullish, right? Price hasn't given me any signs to be bearish. However, any little retest back into, I would say 109, 150, then I would favor some longs on the dollar. So ahead of such an important event, I do stress understanding why things are moving is such an important time, such a crucial time in the markets right now to understand why things are moving over how it's moving. So if you figure out why things are moving, use that to your advantage, trade safe, have a good trading week, stay tuned on the channel, loads of exciting things coming, but I hope you all have a great week, trade safe, see you soon, take care, thanks, bye.